So now let's look at some example on how you can use the different scores to take advantage for our trading style. Let's start with the option score, right? So if you're a swing trader, the option score is really a great market intelligence tool that quantifies options market sentiment from 0 to 5. So 0, obviously very bearish, 5, very bullish. So interpreting the changes in the score can help you understand shift in the expectation of the market in positioning, and can also be a good indicator of selecting some trade ideas and also selecting the timing. So typically when we see a rising option score, this means that we are seeing an increasing bullish sentiment among option traders and positions. So this suggests growing confidence in an upside potential, and this can also be a signal of market positioning at higher prices. So again, this is a sentiment indicator. It's not a crystal ball as always, but this takes in consideration what's going on in the option market. When we see a falling Q score, this suggests actually the growth of a bearish sentiment, or maybe like an increase in hedging activity in the asset. So that means that the market is kind of expecting potential downside moves. So they are either positioning for a downside, or they are hedging themselves from a potential downside move. If the option score, for example, moves from neutral to, which is a score of 3, to a score of 4 and 5, which is bullish, a swing trader could interpret this as a potential position for a rally, or maybe look for upside momentum on the asset. If the score drops from high to low, this could reflect a very strong increase in bearish bets, right? So if you see, for example, an option score going from 5 to 0, then again, this could be a warning signal on the asset. We're going to look at some example. This is a very cool example that we showed many times, and this is taken as of, this is the history of NVIDIA, but around April 22nd or 23rd, we were in a very bearish market, right? There was a very high volatility. NVIDIA dropped below the $100 range, so that was a very strong downside move that you see. And then suddenly the narrative changed. So we saw obviously more positive news coming in, but at the same time, all the AI narrative and the AI trend on NVIDIA. But we also saw that the market completely changed positioning. So we saw that the option score went from 0 to 4 in a matter of a couple of days. This was the beginning of the recent trend that we saw from $100 to now at all-time high on NVIDIA. So again, this could have been a very nice signal of option sentiment changing, and the option Q score could have actually helped you understand this very easy. The second example is also on Google. We had recent earnings there, and also the Q score dropped during that period, but then we went bullish again. So we moved very strongly to an upside score that you see here. And again, this was another start of a trend. Now I think Google is quoting at around $200. So we saw like a strong increase in the price there from around 150. So that was a very nice move. Now let's look at the momentum score. All right, so the momentum score is really trying to quantify the strength and direction of the price trend. And again, we go from a scale of 0, which is a bearish momentum, to a scale of 5, which is a bullish momentum. And basically, understanding the changes can really help you confirm the validity of the trend and align with your trade selection and timing. So when we see a rising momentum, that indicates that we see a strengthening in price trends, and we see an increase in bullish sentiment as well coming from the price action. And basically, this could mean that the price is gaining upward momentum, and then and again, this can support how you place your trades and how you can align with the trend. On the other side, if we see a falling momentum score, this could signal that we are seeing a weakening trend, and basically bearish pressure is emerging. And again, we could see potential pullbacks, and again, this could actually confirm potentially a reversal trade and align with your strategy, of course. So let's go and see again some other example, right? So this is another good example of the momentum score, and this was around February time, when we saw basically when we had the tariff announcement at the beginning, and we saw obviously the S&P dropping around 20% here. You can see clearly that the momentum score drops drastically in a couple of days, and again, that was the beginning, and it could have been a good signal for a downside trend right here. The market lost about 20% there, and basically you can see how the momentum score could have kind of like showed this ahead of the move, or right at the beginning of the move. The third score is the seasonality score. And again, we're looking at past price action to potentially predict the next 5 days of price movement. We go from a score of -5 to +5. So -5 is bearish seasonality, and +5 is bullish seasonality. And what does it mean? How can you read this score, right? So when we see a rising seasonality score, that can indicate that the asset is entering a period with historically stronger price performance, suggesting a higher probability of upward movement based on past seasonal trends. Again, we are using the history to potentially predict the future. On the other hand, if we see a falling seasonality, then that could be a signal that the asset is moving into an historically weaker seasonal period. And again, this could actually imply increased risk or potentially downside or consolidation. So how can you use the seasonality score? You can actually use it as a timing tool to align with your trades. A rising score can potentially encourage prioritizing setups that align with seasonal strength, improving the odds of success in that case. And a falling score can actually suggest that you should be maybe more cautious and look at risk, and maybe be careful of potential pullbacks or sideways trend as well. Let's do another example here. Again, here we also have the QQQ here. This is what we see, the price of QQQ in February. Again, before the move, we saw a massive down move on the seasonality score, what you see in the red quadrant there. And basically that was like a few days before the price actually dropped in February. So the seasonality score in this case, that was very, very bullish on the left-hand side, went very bearish in a matter of a couple of days. That could have been an interesting signal of, hey, maybe something is happening. I should be worried about what's going on. And then, of course, we had the announcement, we had the tariff, but then, the seasonality score was able to kind of precede the downside move that we saw in February. All right. The last one is the volatility score, right? So we are looking, this is not a directional indicator. We're actually looking at understanding market volatility from low to high. So obviously we have a 0, which is a low volatility environment, and a 5, which is a high volatility environment. Volatility is key for traders to manage risk, time trades, and obviously select the appropriate strategy. So whenever you see a rising volatility score, it generally indicates that we are seeing an increase in market volatility, which can also increase the uncertainty. We could also see larger price swings and potentially more trading opportunities, but at the same time, we are going to see an increase in risk. When we see a falling volatility score, We are obviously in a low volatility environment, meaning that the market is very calm. And obviously, we have tighter price ranges and, of course, less opportunities for large moves. So, based on the type of strategy that you're running, you can also be accountable for that. And, of course, we're going to see a lower risk as well because of the lower volatility. So how can you use the volatility score? So if you are looking at a rising score, you could expect wider price swings. And of course, that can help you potentially adjust not only your position sizing, but also your risk management. So you could actually have tighter stops, larger stops and larger take profit targets. When you see a falling score, you can actually focus on strategies that might perform in a stable or trending market with lower volatility. And when you see a significant shift in the score, that can actually be a warning sign that something is changing in terms of market regime. And of course, you might have to reassess your strategy and the way you trade. So the volatility score is really a market risk sentiment tool that can help you not only take trades, but also understand how to manage your trade by looking at volatility. And of course, the most important part is always risk management. So let's look at an example. So we're going to look at an example from last week. The ticker is TEAM, TEAM, which is Atlassian Corporation. It's a technology company. And this stock came up in one of our screener. We're going to go into the screener later in the presentation. But what we see is that the Q score is on the volatility Q score was very, very high. We had a 5 volatility Q score. When we open the dashboard, we also see that we are in a negative gamma condition, and we can also see the other Q score in one place. So we are very, very bearish option score, very, very bearish momentum score, no seasonality signal, and a very, very high volatility. All right. Next, we can look at our net gamma exposure chart to understand the overall positioning. So we see a lot of like negative gamma to the downside there with the very, very large wide red bars that you see. And then finally, we can look at our swing trading model. Our swing trading model also confirms we are in a bearish bias. So you have, again, 3 of our models or 4 of our models here. You have our negative gamma environment that we know, of course, what that means. We have our Q scores with the 4 factors. We have a net gamma exposure chart, and we have our swing trading model. So what could we do in this case, right? So we know that the volatility is very high, and we know that the option activity is very bearish and the momentum is very bearish. So this environment could be a favorable environment for selling premium, but what do we do? And again, we could have sold credit spreads by looking at the swing trading model. And then if we look at the price action from last week, the stock is down now almost 15%. So if you were to, for example, sell credit spreads there on the call side, in this case, because of the bearish momentum, you probably could have pocketed the full premium in a few days or in a couple of days, depending on the move. But this is kind of like an analysis here.